Time now for Futures in Focus. Joining us now from the CME is Scott Shellady, the Cow Guy Group managing partner. Let's go straight there. Scott, look, we get news that we're going to get a trade deal. We get a tweet from Trump as well talking about the agricultural sector. Look, I'm really curious. What is your reaction? Do you believe that these trade talks are back on, or do you believe that this is a head fake?
I hate to tell you this, but I think it's a head fake, and if you start with the agricultural sector, which has really been whipped and, to and fro about more than any other sector, more than, say, the equities and asset prices, I'm suffering now a little bit of deal delirium, right? I don't get as excited on news like we've already had today, and I don't get as upset on bad news because, as you've watched the agricultural sector over the last year and a bit or 2 years, on the good news, we used to really get excited, and the bad news, we got very sad. But slowly but surely over time, those moves have been more and more muted. So I'm kind of feeling that now. I can't say that the water's really warm. Everybody piled back in because we've delayed some of these tariffs and we've kind of loosened some things up a little bit. Because at the end of the day, I'm now playing this game. Until there's a deal, there is no deal, and that's how I'm moving forward.
OK, so what we've seen thus far this week is the curve inverting. We've got recession signals all over the place. The data actually out of the U.S. economy don't necessarily confirm that. The CPI data, the small business survey today, both look pretty good. But the curve indicates a recession is coming. Look, when you talk to people down there, do they believe a recession is coming?
No, and I don't believe a recession's coming either. Listen. In the old days, pre-2008 or pre-financial crisis, after quantitative easing, we've screwed up the pricing mechanism all over the place, and nobody can really find true value anymore because of what the central banks have done to these markets. But before that, we've been able to manage our crises by a 1955 handbook on how to fix your economy. But now we have a very difficult time moving forward with that, and I think that going forward, we have an inverted yield curve because everybody else has got negative rates. That doesn't mean we're going into a recession. So my question to you is, why shouldn't the yield curve be inverted, seeing what's going on around the world?